Shares in Airbnb higher in the pre-market. The company posted stronger revenue than expected. It introduced new features during the quarter, including improved maps, updated cancellation policies, and this seems to be really working out, reserve now, pay later. Let's get more from Dan Wasiolek, Senior Equity Analyst at Morningstar. Dan, thanks very much for joining us. What jumped out for you in the quarter?
Yeah, thanks for having me. So, I mean, you alluded to some of it, but what jumped out is that demand is improving, profitability is improving, and they're executing on expanding into new markets, which is expanding their total addressable market, we think threefold over the next several years. So there was a lot to like in the quarter.
It's fascinating. I mean, we hear, the consumer's under pressure, but people still traveling. And actually, sorry, could you give me, I'm not sure if you had this to hand, how much of their business would be tied to the USA? Is it a huge portion of their revenue?
Yeah, it's a significant portion. So North America, they don't break out the US, but
Okay.
In North America, revenue is about half of their total business. They're in 220 countries. But to your point, that reserve now, pay later feature, they did note that North America, which is their most mature region, that volumes or nights booked were up 5% year over year. Now, that's significant because when you look at the hotel operators in the US, for example, they're seeing flat to slightly negative volume growth recently. So this is within travel, a name that is, outperforming the US despite, some economic uncertainty.
Yeah, it's interesting. I noticed Six Flags, another leisure travel stock, warning of weaker than expected growth. Their initiatives like price cuts not paying out. Bloomberg intelligence suggests that the firm could see more cancellations with this reserve now, pay later. I guess it depends on the small print of this stuff, but do you think that could be a risk?
Yeah, it was talked a little bit about on the conference call. I mean, they've tested this before they launched it officially in the US in August. And, based on their tests and their beta testing, they think the cancellations, will be relatively minor. It is something to monitor. But, given the attraction, so like 60% of people that have been offered this reserve now, pay later are taking Airbnb up on the feature. And it kind of evens the playing field because when typically you book a hotel, you're not paying until the stay. So this is something I think that makes sense for them to do and kind of, put some more on par with those competitors.
So the stock was trading at around $120, and we'll have a look at the pre-market again maybe in a sec. But your fair market value about $154.
Yeah, that's right. So, I mean, we're at $154 trading about a 20% discount. I think what the market is focused on or has been focused on is that Airbnb is investing into expanding into international markets, expanding into hotel-like services, and offering experiences. We think that's very attractive for the long-term growth and profitability growth profile. But in the near term, it's causing operating margins to be lower this year than they were in 2024. The market can be near-term oriented. We take a more of an intermediate, longer-term view. So we think that this is actually presenting an opportunity for investors.
What does experiences mean in this context?
Yeah, it's things to do. So the leader here is a company that TripAdvisor owns called Viator. Now, it's a huge market. It's about $300 billion, only 30% online penetrated. And Viator, which is a leader, only has a low single-digit share. Airbnb, we think, is going to do very well in this market because of their individual hosts that have expertise of their locales. So we think they can, generate $10 billion in bookings from experiences and services by the end of this decade.
You talked about hotels. So how are they working with hotels, Airbnb? I mean, it would seem they'd be arch enemies like cats and dogs.
Yeah, well, so hotels, they are adding hotels, but their strategy with this is they're really just focused on adding boutique, unique type hotels in areas where there isn't a lot of Airbnb supply. I mean, their commercials say that, for a lot of travel experiences, an Airbnb is the best fit. But they acknowledge that for certain types of travel, sometimes a hotel could be a better fit. And it's still a huge expansion opportunity. For every 10 bookings that occur in the US, only one is an Airbnb. That is a huge market opportunity for their core alternative accommodation business, but also points to why, around the edges that they're kind of wanting to add some hotel listings.
What about rivals like Vrbo, VRBO? Do they have anything like, well, I know their market share is much smaller, but are they in any way a competitive threat to Airbnb?
Yeah, actually, the main competitor to vacation rentals for Airbnb is Booking Holdings,
Hmm.
which is more of an internationally aware known company. Vrbo is the number three player. So the way you can kind of think about revenue share and the is Airbnb probably has at least 50%. Booking Holdings probably has around 30, and then you have Vrbo, which is maybe around 10%. Vrbo is owned by Expedia. Expedia reported last night. Vrbo, they did a lot of platform reinvestments. That's just now starting to return to growth. We just had 10% revenue growth for Airbnb. Vrbo's just now returning to some positive growth. So they've been losing share, but they're a number three player.
Fascinating. Dan, anything else? Anything else that we should watch out for from Airbnb in the next year or so? Is there any surprises coming? Perhaps things that investors don't realize are in the hopper?
Yeah, so I mean, to the degree that we think that the stock has been hindered by this near-term investment, they did guide up EBITDA margins for the year.
Hmm.
They still will be below 2024, but they kind of communicated that they're through the heavy peak investment spend. So as we look into 2026 and beyond, I think we're kind of reaching an inflection point where margins just start to expand again.
Thank you very much, Dan. Really appreciate it.
All right, thank you.
Dan Wasiolek, Senior Equity Analyst at Morningstar.